It was a good day for the stock market yesterday. The Dow Jones rose more than 400 points, while the S&P 500 and NASDAQ saw gains of roughly 1%.
And history suggests we could see stocks continue to rise. Since 1950, the S&P 500 has risen an average of 15% in the 12-month period following midterm elections. For more on this, let's bring in Marley Kayden, business reporter and professor at DePaul University in Chicago. So Marley, let's start with this fundamental question. Why does the market perform so well following midterms?
Well, you said it first, Scott. Thank you for having me. Historically, into the year end and then in the 12 months following any midterm, you do typically see gains in the market. And that's all because they've gotten some clarity about what party is steering our future policy and our regulation going forward, as well as government spending. That's all very important. Uncertainty is the enemy of Wall Street. It hates uncertainty. That's where we get all that volatility. So just knowing who's in control of policy and spending is enough to see some positive gains in the market. Obviously, which party it is a huge part of that as well.
Marley, do you expect to see similar gains over the next year?
I think the assumption right now is that the Republican Party will, at a minimum, gain control of the House. If that happens, I do think we should expect to see those historical gains through the end of the year and in the 12 months following the midterms, just because traditionally stocks respond better to a Republican-controlled House. That's how it's always historically been. Typically, they're more pro-business. We'll see less regulation, less tax creation. They're more pro-business. So generally, we see the markets and investors respond more favorably to a Republican-controlled House.
All of this happening beneath these vicious and ominous storm clouds of rising interest rates. We have to assume that's going to get in the way of some of this potential growth.
Absolutely. One of the things that will happen here, if things play out how they're expected, if the Republicans take the House and possibly the Senate too, we end up with a divided government. And traditionally, those are in favor of the economy. A divided government, any kind of political gridlock, will really allow the Fed to better do its job. Because as our two main parties sort of can't agree on anything, the Fed is sort of left on its own to control monetary policy and try to tame inflation. There's much less meddling when we're in a political gridlock situation when it comes to the Fed. So hopefully they can work harder to tamper our inflation and get those numbers down, get those prices down, so we can stop feeling that pinch we've all been feeling for what feels like an eternity now.
The sources with whom we've been speaking in Washington are concerned about the debt ceiling being flirted with or breached in the new Congress. If we get close, ominously close to the debt ceiling being breached, what are the implications of that on the economy?
I think what we'll see more of likely is just a lot of theatrics, right? Because if we get into a political gridlock situation, a divided government, we always see those theatrics play out. The threat of an economic collapse, the threat of a government shutdown, the threat of hitting the debt ceiling. It always happens. We have yet to have any major catastrophic event that's really played out because of political disagreement in this arena. They always push it to the very, very end and scare us just enough. But usually there is some resolution that is found. So I think more likely than not, we'll just see a lot of theatrics over the next 2 years, as opposed to anything that could really further endanger our economy.
From Chicago, Marley Kayden, thank you very much.
Thank you.